The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Where'd that come from? Let's start over there. Good morning from TFNN. Welcome to the April 23rd, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a wonderful Wednesday. I know I did. I'm looking forward to a terrific Thursday, especially starting the day off with each of you out there. So let's make sure that we do everything we can to have a terrific Thursday as we gear up for the weekend, only one day away. Of course, the easiest way to always do that is to remember that life happens for us, not to us. That's right. When we make that little 2x4 shift out there, it means that we can find the gift in every set of circumstance that life is going to toss at us. And that's really the role of the universe out there, just as the role of the markets is to toss something out for the bulls and the bears. We'll go looking for those messages on multiple time frames out there. But most importantly, I want you to know that I'm grateful for your presence. I'm honored by your presence. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Thursday. Of course, none other than the Hotel California, which is sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got Dow futures. They're trading down 61 points, trading out at 17,883. S&P futures off 5 1/4. They're trading at 2,095. NASDAQ futures are trading off about 9 points at 44.36 and change. Russell down about 3 points at 12.59. U.S. dollar index back 7 pennies, trading out at 98.06. Gold's up $2 right now. She's trading at 11.89. Silver up a penny, trading at 15.81. Light sweet crude up 53 cents. She's trading out at 56.68. But as we do each morning, let's begin by taking a look at what's going on around the world out here. Let's start off with Asia. Asia, slightly mixed bag out here last night. We had the Shanghai up 17 points, about 0.4%. We had the Hang Seng down 106 points, off 0.4%, and the Nikkei up about 0.3%, also up 53 points. Let's start with the Nikkei out here. Nikkei closed out at 20,187. What's the Nikkei doing? Well, the Nikkei finally got above its two A to B equals CD patterns. There were two. Now, we use these A to B equals CD tools as price projection tools, but we also use them to be able to buy and sell the D point. I have found the most effective use for the lightning bolt pattern, the A to B equals CD. The two most effective uses are to be able to give you a price projection tool out there, and then to watch as price is traveling up along that C to D leg. And then two, to be able to help you buy or sell that next D point out there. If we take a look at the A to B equals CD patterns, those lightning bolts, you can come all the way back down to the October lows inside the Nikkei. That was on October 17th. That was your A point out there. Your B point, that took place out here on the trading session of December 8th. Your C point, little retracement down into low on January 16th. 1-to-1, A to B equals CD. That gives us a price projection. Where is that price projection out here? Let me just make sure I've got the right thing out here. Let me see. Let me do this. How about that? I'm going to put the second one in just in case. There we go. Okay. So the one, excuse me, the 1-to-1 price projection, 20,094. We'll go ahead and we'll paint in the other one momentarily. So 20,094. You close at 20,187. You're just above that. Is there any reason to, for price not to move up to 21,046? There's no reason as we speak right now on April the 23rd. So that becomes our next price target. I see a blue line going across my screen at 20,809. I suppose if we go to a longer term chart, well, let's just do that. Let's not suppose anything. Let's just actually see, why did Stevie draw that line in there? Was it a swing point? Was it, what was it? Yeah, it's a swing point. It's a swing point that takes you back to an area of resistance that began in March of 2000. So that's the next level. So we got an A to B equals CD up into that area. We've got a swing point that it's trading into. So 20,809 becomes our target on the Nikkei out here. If we go back and I said I would draw on the smaller one. So let's go take a look at the smaller A to B equals CD pattern out here. That's the one just simply coming off of this low from April Fool's Day. So a very small, very recent A to B equals CD. But if we take a look at that, your B point out here on April the 10th and your C point out here on April the 20th. Actually, that is the one. Actually, there's multiple A to B equals CD patterns inside of the Nikkei, because there was even another one coming off of the lows on March 10th. But let's take a look at this one here. Let's take a look at the most recent one. This one says you've got your 1-to-1 configuration taking up to 20,552, 1 to 1.272, 1 to 1.272. And really what I like to do is use Fibonacci expansions of that C to D leg. So either 1.272, 1.618, and we can get beyond that as well. But those are the two primary levels that we like to look at. So at this stage of the game, it looks like the Nikkei headed to that 20,845, supported by A to B equals CD patterns, as well as resistance of a long-term swing point from back in 2000. If we take a look at the Hang Seng, off 106 points last night, any big deal out here? And the answer is no, not really. It was really moving to higher ground. Did it actually even form a bearish engulfing candle? The open 27.821, 27.8. No, it did not. Little piercing candle for sure, but it looks to me like the Hang Seng, its next level, 1 to 2 on its A to B equals CD Richter scale. That'll take you up into the 28,821 level. And that's what looks like is going on inside of the Hang Seng. If we take a look at the Shanghai last night closing out at 46.26 out here, actually hitting our price target, not our price target, but Leonardo da Fibonacci da Pisa. His price target, his 0.618 price target was a 46.41.67. If we want to go ahead and get exact out here, what we actually saw last night was a move up to 44.56. 56 and 91 pennies, closing out at 46.25. So it's made that elusive. Maybe it wasn't so elusive, but it has been elusive for a long time. That 0.618 retracement. If we go back, we take a look at the weekly chart out here. Well, I guess let's take a look at the monthly chart. Might be a little bit easier to do that. And we take a look at what we were looking at as far as those retracement levels. We were coming off of the high out here from back in 2007 down to the low out here in 2008. We saw really the Shanghai do nothing more than build the base down here at the bottom, which it has finally broken out of. You've come into that 0.618 with a real nice wide-ranging bar. Now it's April 23rd, so we've got probably another 4 or 5 trading sessions left in the period. We'll see if price now markets don't end on wide-ranging bars like this. Now, of course, the month is not over, even though we're looking at a monthly chart. Let's just go with the assumption that the month is going to the month ended here. What I can tell you is that markets do not end on wide-ranging bars like this. It just simply doesn't. You go back and take a look at any wide-ranging bar. Like, that doesn't mean that it can't. That doesn't mean that there is a 1 in 100 shot or 2 in 100 shot. But the percentages are so small that you've got to pay attention to them. And in fact, if we go take a look at the Shanghai, go over to the left-hand side of the chart out here. When it was moving higher, much like it is right now. You go back, take a look at December of 2006, that month, fairly nice wide-ranging bar. This one that we're currently in, even wider ranging. Market didn't end there. Take a look at the month here of April of 2007. That looks like a wide-ranging bar like the one we're in right now, only ours looks a little bit stronger, ours meaning the current one that we're in out here. Wide-ranging bars, they provide you with enormous amounts of information. If you just simply allow the market to communicate to you, and you spend time learning that language of the markets, it's amazing what it will do for you. Now, I know that many people, if you're watching us on Tiger TV, you're taking a look at this chart. Sometimes, if you're relatively new to technical trading, or, maybe, and when I say new, you haven't invested 10,000 hours or so into really immersing yourself with inside technical trading, many of the terms that we just banter around here or throw around here, sound like gibberish or what have you. But trust me, it is, if you're really learning, you want to really master the language of the markets out there, I'm happy to teach you how to do that, because I cut through. I make it easy I make it easy for you so that you don't have to spend those 10,000 hours. I try to fast forward. It'd be like, if you were learning to play golf, can you imagine, spending your time hanging out with, who's the guy that just won the Masters, the young lad out there. But, hanging around with somebody that's playing, well, how about, you hang around with Greg Norman, Tiger Woods, Jack Nicklaus, Arnold Palmer, right? If you hung around those guys, do you think that they would, playing golf, folks? For those of you that have played golf, you tell me what percentage of playing golf is upstairs in between your ears out there versus the actual mechanics. Look, mechanics are important. You've got to square up the club when you get back to the ball. That's basically all you have to do, because there are so many different mechanical swings that are out there, if you watch them on the telestrator. But the reality is, when they're coming down the back nine and you're in the lead or you're trying to move up there, how important is it for you to have a sound mind out there? Folks, it works that way in everything, which is why I'm going to be doing the workshop. It's termed the psychology of trading. The reality is it's the psychology of life out there. And it's a set of strategies and tools, just like I take a look at strategies and tools. We go dissect these charts each and every day with you. And it's a set of strategies that you'll be able to use, pass on to others. In fact, it's more applicable. The reality is it's more applicable, this workshop that I'm going to do, than any other technical trading pattern recognition program that I've ever done out there. So I hope you take advantage of that. Come on over to the homepage of TFNN.com. The strategy here, the psychology of what these candlesticks are telling us right now about the Shanghai is it's up to a level, that 0.618. This can often be a resting place, but it's not where the market will end. So if the market decides to start moving sideways, that's all that it's doing. It's just working off an overbought condition. It's getting up to an elevator where it allows people to get off of the elevator, and then it should resume its move up into that 0.786 retracement level, which is 54.28 out there. So we spent a lot of time on this, but the reality is it doesn't matter which chart it is that we're looking at. The chart patterns are basically the same. It doesn't matter what we look at. Now, they're not the same, but the way that you and I go about interpreting those charts is the same, so it doesn't matter what we're looking at. Now, we had a call yesterday towards the end of the session, the end of the hour, with for Maria in New York, I believe it was, and she was taking a look at the DAX, and she was shorting the DAX, which is fine. We'll take a look at that this morning. Let's go take a look at it right now. But here we step back and we take a look at the DAX itself right now. The DAX certainly benefiting from the quantitative easing program that really just began over in Europe. If we take Mario Draghi at his word, this is the closest he's been able to come to his word out here, right? With regard to the bond purchases that are going on out there, 60 billion a month or something like that. So he's trying to do the same thing, he's trying to financially engineer the markets over there. Look, the bottom line is whether we can spend all the time talking about whether somebody should or shouldn't. The reality is, what's the impact on the markets that you trade, and just simply getting that type of edge. So we have seen the DAX. Look, it was before Draghi's decision, I believe, but back in October 2014, we take a look at the DAX during that Ebola scare. Right, that was the biggest retracement that we've seen in the market in quite some time out here. Certainly, at least since the September 2011 time period. So we come back. Let's go take a look at the DAX, you and I out here, because it has a price projection of 14,000. So even though Maria is playing this as an A to B equals CD down, H.M. Gartley would say buy that next D point should it form. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 63 points right now. S&P down about 4.25 points. Let's go back to the DAX. Let's take a look at the DAX. Let's look at it using several tools out here. Now, the first tool that we're looking at, this is a monthly chart here for the DAX. And the DAX had been in a long-term consolidation. You could take it all the way back into 1996. So between 1996, the DAX traveled in between 2271 at its bottom, at the lows out there, up to the 8,136 level. So it was basically a 5,900-point consolidation, give or take, out there. So we're just simply going to round. And once the DAX broke through that area, whenever you break through a consolidation, doesn't matter whether you're using a 10-minute chart, a monthly chart, a daily chart out there. Again, this is, we have price projection tools, A to B equals CD patterns. That's one set of tools for price projections. We've got expansions of swing points, contractions of swing points. Those are other tools, other great tools to be able to help you identify where price is likely headed to, or headed to next is another way to look at it. We've also got the consolidation is the easiest pattern for any non-technical trader. For somebody who says A to B equals CD, that sounds foreign. I don't know what a real swing point is and so forth. But visually, you can easily see where you're just simply drawing horizontal lines. When we talk about consolidation, it's nothing more than price going in some type of sideways movement out here. And I think it's relatively clear, especially when we mark the tops out here, that you can see the consolidation pattern. I think it's relatively easy to see the bottom as well of this consolidation pattern. And it's what's referred to as a measured move. So when you break out above or below the consolidation, it says that your price projection is going to be equal to or greater than that consolidation level. So this says here that the DAX over time, and now that you've got Mario Draghi, so I haven't been paying attention to the balance sheet, but you can go online, you can go on to search it, you can get to the to their balance sheet, you can see if he really is buying the bonds as they say they are. We know that in the case of our Fed, it was easy to do. You go take a look at the balance sheet each and every month out there and see exactly what was going on inside of our Fed. I'm assuming, the last time I checked, he was doing what he said he was going to do. So that puts liquidity. That's a version of quantitative easing. But look, the reality is that the DAX broke out. The DAX just needed some assistance, right? Broke out of the consolidation box, in essence, back in the May of 2013. Hung around this level means it was above, was below, testing it to confirm that it really wanted to move out and move on up. 5,900 points over time, and it actually did that with conviction on September the 1st. Look, if nothing else, we had the large Ebola scare out here. You got a nice big hammer-style candle down here at that formed here during the month of October. That's another beautiful thing. That's a bullish sign. And the DAX is on its way up to 14,000. Now, it's extremely overbought. They're just simply utilizing one of our momentum indicators, right? We've got a table that we have. It's got 4 pillars on it, right? Momentum is one of those. The power, the energy angle, that's another. Volatility is one. Liquidity, volatility and liquidity, and then volume. So we use those 4 different pillars to help us understand what's going on inside of the market. I don't have the volume inside of the DAX. Do we need the volume inside the DAX? No, not necessarily. It's only one of the pillars out there, but we've got the other pillars out here. We've got these other patterns, and so now that's on the monthly chart. If we take a look at this chart here, the long-term chart, and take a look at Maria, who's gone ahead with the short trade out here. Price ran into a resistance area not too long ago, back on April the 13th, as it neared that 12,466 level. We just were looking at, on the monthly chart, those sideways consolidation moves. Now what we're looking at here are the actual floors within inside those consolidation boxes. These are the floors that are referred to as our horizontal trading ranges. These levels act as natural areas of support and resistance. They just simply seem to form from a, stocks are doing one of 3 things. They're going up, they're going down, or they're going sideways. Oftentimes they're doing 2 of those at the same time. They're going up or down, and they're doing it with inside a sideways channel out here, sideways horizontal channel. And that's really what the DAX has done. Now, we use these numbers here as guidelines, not as exact figures. What Maria needs to see out here inside the DAX is a break of this swing point, which looks like it was tested. That's the swing point from April 17th. Anybody who is in an A to B equals CD pattern needs to see that swing point met. Now, here's where volume is really helpful. What we want to understand is, was this low being 11,674.59, so far today got down to 11,675.58. We don't know if we've got a couple hours worth of trading still left in the DAX, but is it approaching that swing point with volume, or is it light volume? If it's with volume, then it sets up that possibility for that A to B equals CD to the downside. And if it does that on that A to B equals CD to the downside, looks to me like it'll go ahead and go right into, how does this work, folks? It would move right into the bottom of support of that horizontal trading range. 11,408 is that specific number. The 1-to-1 takes you to 11,362. Remember, we use these as guidelines out here. This is Steve Rhodes with TFNN. We get back. Let's go take a look at the Wilshire 5000 after the market opens, because that was another question that came in yesterday. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economies CD. This is a CD that could really deliver, but you have only until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside. And should they lose? No worries. There's zero downside risk here, as you'll still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 56 points, trade out at 17,982. S&P down about 4 points, trade at 2104. Composite off 11 at 5,024. The Russell 2000 trade out at 1263. That's off about $2. DAX is down 122. The FTSE's up $10. You've got gold is up 40 cents right now. Silver back a penny. Light sweet crude up 73 cents, trading at 56.90. Leading the charge to the upside, O'Reilly Automotive up $8. That's up about almost 4% out here. Domino's Pizza, that's up $8 as well, up 8%. Skechers USA, I'm imagining all these are out with numbers, so we'll take a look at these throughout the next hour and a half out here. Skechers is up about 11%, up $8. Eris Group Inc. up 21%, that's up $6. Polaris Industries up $6. Google's up $5. Dunkin' Brands up $3. A Cheesecake Factory, that's up $3. So we got a little sugar, a little spice out here. eBay's up about $3 as well. To the downside, Ameriprise Financial off about $5. That's 3 7/10%. 3M Company down about $4.50. Texas Instruments off about $4. Union Pacific Corp down $3.60. Hershey, hey, what's that doing on the right side? Hershey, the sweet side, supposed to be over on the left side, moving higher. Well, Hershey's is down about 3 7/10% out here. Tesoro Corp off about a couple of bucks. That's in essence what is moving inside of the market. So let's go back. Had a question come in from our man Z inside our Tigers Den out here, asking about the Wilshire 5000. I know that Basil's going to cover some of that, I believe, during his show. So let's take a look at a different pattern, different patterns out here. The same ones that we were talking about earlier this morning. These horizontal trading range boundary lines out here. Now we're looking at a daily chart for the Wilshire 5000. And as we take a look at it, right now it's trading out at 22,306. We can see that, it's up above a horizontal. Now I'm going to go ahead and this is a daily chart. And what I'm going to do here is I'm going to decorate this chart with the horizontal trading range boundary lines for the daily, the weekly, and the monthly. Now, the reason why they're different is because we're using the open or close. We're using the body of the candle, which is the essence of price. And a monthly chart is going to close on a different day than a daily. Well, it's going to the daily and the monthly will tie into each other, or can tie into each other. But the weekly, you got a month that might end on a Wednesday, but the weekly chart's going to be on a Friday, right? I mean, that's at least how charting is done, or at least that's how the calendar weeks or what the charting tools are using out there. Now, so therefore, those lines are going to be a tad different. If we take a look at the monthly numbers, we'll put those up on our screen here. We've got the red lines out here, the solid red lines. Those are the real primary trading range boundary lines on a monthly chart. On a daily chart, it's going to look like they're really widespread out here. But what we can see is the Wilshire 5000. As it got above its daily trading range boundary line of 21,443 out here, and then got above the next level, you can see that acted as resistance. That next level, by the way, is about 22,000. You can see the first time up there, a price failed and moved back down to the bottom of a boundary line out here. We can see that the last time down, which was March 11th, we can see that price came right down into one of these midpoints. That's the dotted line on my screen out here for the Wilshire 5000, 21,580. That is muy bueno support out there, that level as far as holding. Now, what we can also see, it's more likely that if, in fact, the Wilshire can get above its consolidation highs out here, short-term consolidation. That would be March 23rd. That would be the February 25th. That would be the doji candle from April 16th. It's not really that much higher than where we're trading right now, so that level should be tagged and tested, 22,391. But if you can get above that, it says that price ought to rise and run into resistance right around 22,555. When we take a look at this chart out here, that is what it looks like to me it wants to do. But let's go put the weekly horizontal trading range numbers out here just to see if there's anything else, and there really is nothing else up above. We've got nice support in this 22,000 area, really nice support down at 21,580. We're not anywhere near there. It looks like, without any kind of bearish reversal signals out here, that what the Wilshire 2000 wants to do, it wants to stretch, and it wants to get up to 22,554, and that's what the horizontal trading ranges look like. Now we can see nice uptrend that is in place out here inside of the Wilshire, coming off that Ebola scare, October 2014 low out here. So that is what's going on inside of that index. Now that index, if we take a look at that versus the New York Stock Exchange, NYA, and we take a look at its daily, its weekly, its monthly horizontal trading range boundary lines out here, well, we can see inside of the New York Stock Exchange is that where it's been running into resistance here lately, 11,178, that happens to be a midpoint line inside of the New York Stock Exchange. So clearing that level, if in fact the New York Stock Exchange can clear that level, and I believe that it will clear that level, it wants to clear that level, it wants to get off that wall, and if in fact it can get off that wall, where it really runs into resistance is around 11,578, 11,612 out there. The health and wealth of the New York Stock Exchange. The New York Stock Exchange, just as the Wilshire 5000, both excellent arbiters of the health of the market out here. New York Stock Exchange is strong like bull. Strong like bull. It's been struggling in a market that's been doing the old whipsaw, the old two-step tango out there. Is the tango two-step? I don't think it's probably, if I did it as a two-step, that might mean I would be stepping on my partner's feet out there. Wouldn't want to do that. But it is this real whipsaw-y type of moves that we've had inside. Now, a lot of times people would say that the market's been very volatile. Of course, if you and I go look at the VIX index, we could say, what are you talking about? VIX index being down, in the, what is it, the 13s or so out there, so it just all depends on how you actually frame things and how you look at things. Well, here's the deal with the framing inside the New York Stock Exchange. If price can get above that 11,178 at this stage here, it's really the swing point of April 16th, 11,203. Price will run to the upside whether you like it or not. That's really its message out here. And if we take a look at A to B equals CD patterns, that could be underway here inside of the New York Stock Exchange. Our A point's going to be our October lows out here. Our B point is going to be the highs. Looks like maybe they came in right around November 25th. And your C point down here around December 16th. Just so happens that there's a 1-to-1 A to B equals CD to the upside. That would take you up into the 11,542 level. And the New York Stock Exchange, maybe Basil will go ahead and cover that as well. If you take a look at his Chapman wave counts, there couldn't be a stronger picture that the markets want to move higher than looking at the monthly charts for the New York Stock Exchange out there. And that is signaling to both you and I that it wants to move higher, and that is just got to clear. It's just got to clear this one little hurdle out here, 11,203. So that's a number for each of us to be watching. That is the New York Stock Exchange. Now, let's go take a look at some things here that are also moving and grooving in the marketplace. Let's go take a look at O'Reilly Automotive. ORLY is a ticker symbol. Let's see if they were out with numbers out here before the bell. Earnings per share, $2 versus $1.61. I don't know whether that was just simply done from operations or if they, too, are buying back stock like so many people. I was at a function dinner last night, and I was able to get some good statistical information. I was curious. I was wondering, and this came from J.P. Morgan Chase out there, their lead economist. And what I was wondering was whether or not they tracked buybacks and where we were at in that phase, historically when they went back and looked at that information, because I don't have any of that historical information. I know we can get that information, but I figured, hey, it's going to be an easy thing for me to find out. And sure enough, they do track that, at least from the economist standpoint. And overall, when you take a look at markets, it's somewhere right around the 3%. It's somewhere between 2 point something and 3% that accounts for the market rise. At least that's what they're giving. That's what they're getting, and their belief is that even with a small bump inside interest rates, that's not going to slow things down when it comes to the corporates, buybacks that are going on out there. So we should see that continue to be in a full swing. Now, I'm not saying O'Reilly Automotive is doing that or not. They did $1.9 billion in sales versus $1.73, but we know that those buybacks and these low interest rates are just something that they're going to continue to also fuel the markets out here. And if we take a look at O'Reilly Automotive, let's go see what kind of fuel it's got in its tanks out here. It's taking out a B point. It's taken out its most recent swing. It's either the 52-week or all-time high out here, most likely all-time high, which was room 222. The price on April 19th was 222.94. Volume of 461,000 shares, already done 189. Up and above that level, we've seen several rises, several gaps up, several signs of strength. Today is another one. This is not a three-gap play. This gap here does not, at least it doesn't look like it to me. You'd have to do the math on it and percentages, but it does not, even though this is a third gap that we can clearly see on my screen out here, it doesn't look like this is larger than gap number 2 out there. Let's put this on a longer term time frame. O'Reilly Automotive. Let's go see what it is doing out here. Just nothing more than that stair step. A to B equals CD to the upside all over the place. Doesn't look like there's been any buy the D point moves to the downside here. One of H.M. Gartley's favorite patterns, should be yours as well, because it's that opportunity to get in on a move that you just simply missed out on. And it's a great pattern. That's why you want to learn to buy and sell that D point. One of the best uses of that lightning bolt tool out here. If we take a look at the weekly chart, boy, looks pretty darn strong inside of O'Reilly Automotive. How do you gauge? How do you figure where a stock like this is going to move to? The answer is you can't. I don't, no matter what tool we try to use out here, A to B equals CD, expansions of swing points, I just don't, I don't see how you can come up with a decent enough price gauge as to where O'Reilly Automotive is headed to. But right now, Alice, it looks like, to the moon. We've also got Domino's Pizza. How do you like your Domino's Pizza? You like it just with pepperoni? Or like Stevie, pepperoni, onions, and mushrooms. However, I can say I haven't had Domino's pizza, and I can't remember when. But nonetheless, there are people that are certainly ordering Domino's pizza. They generated net income of $46.3 million versus $40.5. Did you know Stevie, back in 1988, tried to buy a Domino's pizza franchise? The only reason I didn't get into the pizza business was because Domino's, Tom Moynihan, was the owner's name, CEO. I don't know if he's still involved with Domino's. I don't think he may be involved with Domino's as a shareholder for sure, and maybe he's the chairman of the board. I don't know. But in any event, they had a requirement that you had to work for Domino's Pizza for a year. I was interested in buying the franchise. I wasn't interested in flipping pizzas. Of course, if you're going to run a business, you got to do it all, right? Otherwise, how can you really impact the business out there? But in any event, did not get into the pizza business. But Domino's Pizza right now, its stock chart, you don't have to actually own a franchise. You can just simply own the stock, and then you're in the pizza pie business. On the weekly chart out here, you've done 1.6 million shares for the week. It's taken out a little shooting star resistance candle. That was from February 23rd. That had 4.2 million shares. So on the weekly basis, let's go see what it's doing on a daily basis. Looks like it might be a little light in the loafers out there, but nonetheless, strong day. Talk about wide price spread and accelerated volume on a daily chart. Nonetheless, even taking out a swing point here on the daily basis that had 1.6 million shares on February 24th, it looks like it's going to be able to easily handle that and do that on a daily basis, get above that high volume, high swing point, and do it with volume out there. So Domino's Pizza looking awfully darn strong out here. Boy, nothing but signs of strength. It had a huge sign of strength, a huge wide-ranging bar on October 14th out here. That was also an earnings date. So Domino's Pizza knocking it out of the ballpark. Let's take a look at Skechers. If we take a look at Skechers, ticker symbol here is SKX. That's up $8, about 11%. Out with numbers as well. Earnings per share, $1.10 versus 61 cents. Boy, how about that for nearly a double play out here? Revenues, that's earnings, 56 million versus 30. Revenues, how about this? Boy, wonder if Skechers has been opening up stores or what is, boy, you have go read their MD&A to figure out how they did this. 768 million versus 546. I think Skechers just simply sells tennis shoes, do they not? Do you own a pair of Skechers? I thought that was mostly kids that own Skechers out there, but man, they're selling something. Either that, or they bought some company or what have you. But boy, that's really killing it on the top line out here. Maybe there's more to Skechers than I really know, but boy, that is really just killing the numbers. And guess what? The market is approving of that. Skechers up this morning with 1.3 million shares out here. Again, another equity here at all-time highs, I'm sure. Let's take a look at a monthly chart just to make sure. It was at least a 50, all-time highs, big time out here in the case of Skechers. Another stock here that is headed to the moon. Nice moonshots out here. We take a look at Skechers. You wonder, these are stocks here most likely that are, some of these are in the New York Stock Exchange, or maybe they're in the small caps out here, like a Domino's Pizza is probably part of the Russell 2000 out there. Let's take a look at some things here that are moving to the downside. So we got to give something to the bulls, something to the bears, something to the buyers, something to the sellers out here. Let's go take a look at Wabco Holdings out here. WBC is the ticker symbol. That's the leader in the clubhouse to the downside. She's trading off $5.67 out here. They too released earnings. Their net sales 652 versus 729. I don't know what Wabco does, but they're struggling a bit on the top line. I would imagine the bottom line. The bottom line, they were able to knock it out of the park out there. Maybe they too are buying stock. We get back from this break. We'll take a look at Wabco. Stock chart really doesn't look too shabby out. This is Steve Rhodes with TFNN. Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 27th and May 5th that only subscribers to his opening call will gain access to. On April 27th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 40 points. S&P is down 1.5. Composites off about 3 points. Russell 2000 just slightly red at the moment. We were talking about WABCO before we went to that last break, but we've only got 2 minutes here, so I can take a look at WABCO during the next hour. Let's just kind of give you let's provide you with an overall synopsis as to what the markets are doing as we speak right now. And, of course, we're going to do that by starting off and taking a look at our summation index here. Summation index and our price oscillators for the New York Stock Exchange. That's the left-hand panel. The center panel is the NASDAQ composite, and the right panel is the Dow. So we use those 3 indicators. Of course, the New York Stock Exchange, we were talking about the Wilshire 5000 earlier, the New York Stock Exchange, which is the better indicator with regard to the health of the marketplace out here. And right now it's saying health and wealth. You've got your price oscillator up above the 0 line. It's very difficult to short a market unless you're really trying to sell that top tick out there. And and God bless you if you are, but it's very difficult to be short a market where it is the buyers that are in control out here. And inside the New York Stock Exchange, that is absolutely its message. It got above that zero line yesterday. It's been a little bit choppy out here. It gave us a message that the market had wanted to pull back when it had a descending tops price oscillator, but it did that. And now price is back up. It was not much of a pullback out there. That just tells you how strong the New York Stock Exchange is. Its price oscillator is above zero. If ever there was a day for the sellers to be able to push that back down below zero, today would be it. Now, a lot of time left in the trading session. It's only 9:55. Anything can happen, even in just simply the next minute. But as we speak right now, it's in bullish territory. It's going to go try to take out those highs, and we gave you the price projection number if it does take out those highs, where it's headed to. So yeah, the New York Stock Exchange, it'll go ahead and lift all of the markets higher out there. We've got the Dow, its price oscillator being above zero as well. You've got the VIX index being below the 50-day exponential moving average. The euro yen, it's moving higher out here. A little bit of a struggle inside the NASDAQ composite, but I'm not too worried about that. It's just gearing up to take out that 5,042 level. And that's it today, folks. But look, I'll be back up in about 10 minutes. So stay tuned. Tom O'Brien will be up with his Market Minute update, and then I'll be back with you from 10 to 11, 10:06, 10:08 to 11. Have a great Thursday. Look forward to seeing you soon.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.